Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Annabelle Huang, partner at Amber Group, to discuss an event that's taking place in Ethereum that investors should be aware of. Annabelle, it's great to meet with you. Welcome to Trade Talks.
Thanks for having me.
All right, let's start on a high level here. Can you tell us the difference between Ethereum and Bitcoin?
Sure. So as we all know, they're the second largest and the largest blockchain in the world. Bitcoin was invented the earliest, and it uses a very simple script language that basically just updates the balance per block on its distributed ledger. Ethereum, however, being the later comer, enables smart contracts, which means the blockchain itself is more programmable. So there are a lot more applications that can be built on it.
So with that said, Annabelle, what are some of the use cases for Ethereum?
Yeah, so what we've seen is this thrive in decentralized finance applications, meaning very similar to traditional finance like trading or borrow lending platforms, but being completely built on top of Ethereum using the smart contract protocols. And it's built in a decentralized fashion. So it's quite fascinating. And on top of that, there's also the NFTs, which are the non-fungible tokens. I think it's pretty hyped up also in the art or collectibles world that can also be enabled on the Ethereum blockchain using ERC-721, which is a format for NFTs.
What are your thoughts on the upcoming Ethereum upgrade called EIP-1559 in July? I remember when the Bitcoin halving occurred, there was a lot of hype around that, and it was kind of a non-event at the end of the day. Do you expect the same with EIP-1559?
So the proposal itself, it proposes a change in the gas fee structure. So before, the miners, whoever mines the next block will get the block rewards, which is 2 Ethereum, and the gas fee that a user sends. But after this proposal go through, if the London upgrade happens in July, then the miners will only receive the block rewards because the base fee will be burned. And sometimes in some cases, they might be able to receive a priority gas fee, which is kind of like a tip to them. So that really affects the miners' economics a lot. But on the user side, because now the base fee is a lot more dynamic, it actually adjusts based on the block size because they're introduced a new mechanism that automatically, dynamically adjusts the block size on Ethereum as well. So as a result, users will experience less network congestions, because right now what happens is when everyone wants to do something on chain, everyone is sending the blocks, but it's a fixed size. So a lot of times your own transaction won't be mined until a few blocks, and that takes a really long time, and the gas fees are ridiculously high. So this proposal is introduced to really improve the user experience. So we as users pay less gas fees and experience less congestions, but really would affect miners' economics. And because the base fee is burned, that will also affect Ethereum's total supply. Some might argue that if the base fee is high enough, that exceeds the new block rewards, then Ethereum will actually become a deflationary asset. So a major difference between Ethereum and Bitcoin is also that Bitcoin has a fixed supply for 20 million, and that's why people really treat it as a inflationary hedge, right, as an anti-inflationary asset class. But Ethereum, under the current design, it is inflationary because, right, you keep mining the blocks. But under this new proposal, it could happen. It's not necessarily in that case, but it could happen that in some cases, Ethereum supply will actually decrease because more Ethereum was burnt as the base fee. So that is quite interesting. And in terms of what we can expect, right, I think right now, actually, a lot of the miners publicly announced that they're in opposition of this proposal because obviously it does hurt a lot of their economics. So there is a little bit of uncertainty whether the Ethereum developers will go through as planned. But I think overall, the miners included, all of our best interest is having a very stable Ethereum blockchain so that everyone benefits from the long term.
So Annabelle, with all that said, if Ethereum is a deflationary asset, is there anything that investors should be aware of? Because in theory, the price should go higher if there's less supply available.
Right, and that's exactly what we saw in the short run when the proposal was first proposed, and looks like it is going to be on schedule to be upgraded in July. And that's when we saw really the incredible ETH run up to over $4,000 before the sell-off this few days. I think investors really bought into the narrative that it is overall positive for Ethereum price because of the supply mechanism change. But I think over the long term, it really depends on the underlying usage of the Ethereum blocks for us to really know whether or not it is actually going to be deflationary for Ethereum, or just slightly reduces the supply. So it is quite interesting, but I do think it is quite favorable for users, which should mean more growth for mindshare and the community around Ethereum. There should be more developers building on it, more users, right? Be it using DeFi applications or playing blockchain-based games, or new users will come in and will be overall positive for Ethereum.
All right, Annabelle, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.